Market sentiment shaky ahead of SEBI stress test results for mutual funds. It's likely to be an unpleasant start to the week for Nifty bulls. Investors are primarily apprehensive as the SEBI mandated mutual funds stress test results seen stressing markets. Well, the stress test results suggests that if the equity markets were to collapse badly, and supposing investors rushed for redemptions, and liquidity in the markets dried up, then in that case it would take an average of about 6 days for mid-cap funds to liquidate 50% of their portfolios and about 14 days on average for small-cap funds to liquidate 50% of their portfolios. The stress test was conducted across 56 small-cap and mid-cap schemes. Gifty Nifty is on the back foot, indicating Nifty shall move back below the psychological 22,000 mark. Blame it on weak leads from Wall Street in Friday's trade as bullish traders reduced their bets on optimism for rate cuts. Tremors were witnessed at Wall Street as inflation remains sticky while the labor market has been resilient. The only positive catalyst in favor of bulls' camp is fall in commodity prices and the recent upward revision of India's GDP for FY25. Please note, Fitch Ratings has raised its forecast for India's economic growth to 7% for the next fiscal year starting 1st April on the back of strong domestic demand and sustained level of business and consumer confidence. Bottom line, net, there are 2 bears for every bull. The nasty script ideally leaves investors to worry a lot as focus now turns to Fed's FOMC meeting on March 19-20th. Until then, volatility is likely to be the hallmark. Global cues are negative. But helping sentiments will be the fact that in Friday's trade, FIIs net bought to the tune of Rs 849 crores. DIIs however sold to the tune of Rs 682 crores. Market breadth for the day is likely to be negative. Sentiment is likely to be risky. Nifty's technicals are suggesting weakening bullish momentum. FNO data suggests the likely trading range for Nifty is likely to be between 21,000 to 22,500 zone. India VIX has cooled towards 13.69 levels. Nifty PCR, 21st March, is at 1.16. Nifty PCR, 28th March, is at 0.96. Nifty Outlook, caution is the buzzword for the day. Nifty, CMP to 2023. Support, 21,900 to 21,800. Resistance, 22,200 to 22,350. Range, 21,800 to 22,200. Bias, sideways to bullish. Bank Nifty, CMP 46594. Support, 46,300 to 46,100. Resistance, 46,900 to 47,200. Range, 46,100 to 46,900. Bias, sideways to bullish. Our call of the day suggests this week is likely to be filled with known unknowns and unknown unknowns. Volatility also is likely to be the hallmark as investors now also shift their attention to the upcoming Lok Sabha polls. The Lok Sabha polls will be held in 7 phases spread over 44 days starting 19th April in the world's largest election. Counting of votes will be taken up on 4th June. Oil marketing companies, OMCs, shall stay depressed as the street fears that the government's decision to cut retail prices of petrol and diesel could hurt the company's profit margins in the near term. Last week, the government announced that OMCs will reduce pump prices of petrol and diesel, making them cheaper by 2 rupees per litre in the national capital. Adani Group plans to invest $14 billion across its portfolio companies in FY25. In the December quarter, Adani's portfolio reported record EBITDA growth of 63.6%, taking its 12-month EBITDA to an all-time high of $9.5 billion, 78,823 crore rupees, in 2023. WTI crude futures are trading above $81 per barrel, the highest in more than 4 months as a surprise decline in US crude inventories.